Welcome to Planet MicroCap. I'm your host, Robert Kraft. Joining me today is Aziz Rahimtoola. He is the founder and CEO of Sabio Holdings. It's a publicly traded company. I got two symbols for you: SBIO on the TSXV Venture and SABOF on the OTCQX. And Sabio will be presenting virtually at our upcoming investor conference, the Planet MicroCap Showcase Vancouver, happening September 6 and 7, 2023. For more information to see Sabio's presentation taking place on Wednesday, September 6th, please register at planetmicrocapshowcase.com. And with that, Aziz, thank you for joining me today. How you doing, man?
Good, Robert. Thank you for having me. Appreciate
Absolutely.
being here.
Absolutely. It's great to have you. You know, it's been a few months since we last did an interview together, but before we get the update and everything going on in the business, can you give us that quick overview of the company and then we'll go from there?
Sure. So Sabio is in the CTV, which is connected TV, and OTT, over the air space. And we're in the ad supported portion of that business. And so what Sabio has is we have one of the most complete end-to-end tech stacks to help brands and agencies effectively reach consumers, help content creators connect with the agencies, provide analytics to both groups. So we are, once again, we have, to use some of the ad tech vernacular, we have a DSP, demand side platform. We have an SSP, supply side platform. And separately, we have our analytics, which is App Science.
Very good. All right. So last time we did an interview together, we published that on April 19, 2023. So let's get that update. I think the company just put out their Q2 results. So what's been going on? Give us the highlights.
Well, we continue, up until obviously, as we just talked about in Q2, we continued we had another great quarter, continue seeing growth. And we see there's an opportunity to continue growing in terms of the CTV OTT marketplace. Cord cutting continues to increase. We are the beneficiaries of that. And so as a company, we are seeing, as we pointed out in Q2, seeing great traction in that. We are also obviously in a macro level dealing with some uncertainty as it relates to future quarters and how much visibility we have there. But we believe this is all short term. And we think there's a real opportunity because cord cutting is not going to decrease. It's just going to increase in the coming month.
Yeah, speaking of that, let's just touch on it real quick, having to do with some of the uncertainty, just not just from a macro level, but also just, on the, in the entertainment industry itself, right? We got these strikes going on. So does that have any potential material effect on the business? And also from the macro side, that too, I'd love to get a little bit more color there.
Yeah, and where that does have a little bit of effect. We do have some entertainment portion of our business, but really the bigger effect is the macro environment. The tightening of interest rates and what's happening with consumer spending is, although consumer spending has been fairly resilient, as you can imagine, major brands that we work with, and we work with the likes of a GM, a Ford, and McDonald's, and some of these major brands, what they are looking at as they look into the marketplace, they're seeing a level of uncertainty. And so they're not necessarily canceling on us, they're delaying some of their spend, or they are reducing some spend. And so the fortunate part is we work with some great brands. We continue seeing these brands work with us. But what we are seeing is some uncertainty and visibility as it relates to near-term spending. But we do believe that, we're fortunate in the sense that we work with some great brands, and we also work with political and advocacy. And so we're going into an election cycle in 2024. We should be the beneficiaries of that. We're already seeing some benefits of political potentially coming in the next few months. But really, we're excited about the 2024 election cycle as well.
Absolutely. And, in talking with some of the brands that you mentioned McDonald's, GM, what are some of the things that they're hoping to see from a macro perspective that then benefits Sabio, as you kind of navigate these waters right now?
Yeah, overall, they're seeing commodity prices come down in a lot of cases. Although having said that, they're putting reserves aside for rainy funds. For what they believe could be a downturn. And now that hasn't obviously materialized, but what they're hoping to see is some sort of leveling off of inflation that will then allow them to feel a level of comfort that the interest rate increases are done. Once that is done and they feel a good level of that, now you can see where the economy is actually at a steady state. And that's the biggest concern they have. They don't know where the steady state element of the economy is going to be because, if the interest rates go up, and obviously then you have the effects on consumers through credit card, mortgages, and car payments. They're worried about discretionary income. But we do believe that what they have told us is that they are cautiously optimistic. They believe that things will kind of, we'll see some parting of the clouds coming in Q4. And so they're cautious as it relates to some of the Q3, but they do believe that Q4 and potentially some leveling off in Q1 as we go into the next year. So, it's really a situation where they're being pragmatic and they're being cautious, as the banks are, and putting the reserves on the side. But, as they always do, what happens is sometimes these brands, they do catch-up spend at the end of the year when things are better than they expected. And that's what, and we've been the beneficiary of that in the past. So that's where things are at.
Very good. All right. My final question for you here today, try and keep it short form, encourage people to go see your presentation, right?
Sorry.
No, that's not your fault. You got to explain it. So, from what you can tell us, in your opinion, what would you say are the 1 to 2 things that you want folks who are watching this to really focus on for the business moving forward for the rest of 2023 going into 2024?
Well, the first of which is we have been adjusted positive EBITDA for 3 years straight. That's something we take seriously. And when it comes to an uncertain environment, we have put in cost-cutting measures. We continue doing that. It's something that we take seriously. So we're not this high-flying tech company that is all about growth at all costs. We've not been that for 3 years. So that's first and foremost something that is core and important to us. Second of which is this is the opportunity for us to continue taking market share in a growing space of CTV OTT. Cord cutting is not decreasing. Cord cutting is increasing. And so by having one of the most complete end-to-end tech stacks, and as you could imagine, people are cutting cable at a faster rate in a downturn than any other time, we will be the beneficiaries of that. So there's sometimes the short-term challenges you deal with that we believe are short-lived, and then there's a long-term opportunity. And I think that's really what Sabio is well positioned for, the long-term opportunity.
Very good. All right. I think we'll leave it there. Aziz, where can our audience go and find more information on Sabio Holdings?
It's on our website at sabioholding.com. You could also follow us, our page on LinkedIn, and happy to answer any questions. Please send them our way, and we'll also be at some of the conferences in the coming months.
Very good. All right. Well, Aziz, thank you so much for joining me today. Really do appreciate it. Good luck. Stay safe. I look forward to our next update.
Sounds like a plan. Thank you, Robert. Appreciate it.
Thank you.